So this is where the role of RBI gets even more important in the economy in terms of predicting the future of the country. But is it possible that every time RBI will just go ahead and print the money and let it loose in the market? The foreign exchange market has evolved as a key factor, as a key segment of the Indian financial market. So the Reserve Bank of India is not just a bank which is going to function like any other commercial bank. Good morning and welcome to the first session of Unit 2 in Management of Banking and Insurance Services. This session is going to concentrate upon the role of the central banker, and that is Reserve Bank of India. Now, most of us know the Reserve Bank of India is the apex bank of our country, and it plays a very, very important role in terms of governing the economy. But what actually the RBI does? What are the functions? What are the objectives? How does the RBI guide the economy altogether? Let's have a quick look into the session. Now, the Reserve Bank of India started in the year April 1st, 1935. And that's where you would see that it was initially known as the Imperial Bank. And after the independence, it was brought under a separate Regulation Act of the 1949, and then it was made as the Reserve Bank of India. Now, the key functions of the Reserve Bank is that it is a banker's bank, so it's a very big role altogether, custodian of foreign reserve, controller of credit, management of printing of notes and currency in the country. So the Reserve Bank of India is not just a bank which is going to function like any other commercial bank, or it is not just going to be a standalone monitor. It is going to be the bank that is going to control the entire economy in terms of the financial transactions, the financial value, the monetary policy, the credit policy. There's a whole lot of functions that the RBI does in order to keep the economy intact. In fact, if you would have seen the current scenario where we have been talking about the pandemic, the COVID-19 scenario, it was the RBI who had come forward and understood the situation of the customers and tried to apply in for the moratorium altogether. So whenever there is a push that is needed in the economy in terms of money or in terms of any kind of financial aid, RBI is the only institution that we can talk about. RBI tries to bring in a structure, a framework, a policy altogether that looks forward, that takes care of the entire economy. So RBI is, it is not just a leading institution altogether. It's not just something which we can talk about, a lending and borrowing, but RBI has got a very, very important say when it comes to the economy of the country. Recently, when our Prime Minister had announced about the Atmanirbhar plan, a 20 lakh crore push for the economy, we had to go back to RBI and ask for its help in terms of extending it to the economy. Even now, RBI has been able to push in several funds, several aid altogether for the development of the economy. So RBI is going to be the key player on which the entire Indian economy stands. Moving forward, let's talk about the function of RBI. The most interesting function that everybody wants to know and understand is the word called as issuing of notes. That means RBI is the sole authority in the entire country which has been given with the permission of printing the currency notes. Many a times, right from our childhood, it has always been a game, or it has always been a play in terms of Monopoly, in terms of other card games or any games where you see the dummy currency notes. People get so excited by looking at this currency note, and every time it flashes at the top of your mind, who prints this note? Who has been given the authority to sign on the note? Who is the authority in terms of determining the value of the note? All these questions are quite interesting, and the answer to these questions is RBI. Why? Because RBI is the only sole authority in entire country which has been authorized to print note, which has been authorized to determine the value of the note. So when the government had decided in the term of demonetization, when they wanted to abolish the 500 rupee note and the 1000 rupee note, RBI had to take a call there and they reintroduced the 500 rupee note and a 2000 rupee note in the place of the 1000 rupees. So what we are trying to see here is that RBI will have a very, very strong and a stringent function in terms of printing of notes, in terms of printing of the value, understanding the entire functionality, entire stand of which note, which currency, which denomination, how much it needs to be printed, when it needs to be printed, and when the economy actually needs a push altogether. So that is why the issue of notes is a very, very important and a crucial function for the economy. Followed by banker to the government. Many a times we ask this question, the government of India relies on whom when they want money? Now, let's say the government wants to start a project in railways or in defense or in agro sector or probably in the manufacturing sector. The government also requires money like any other individual. And that money is not easily available. The government has to think about it. The government has to understand that money is not going to be easily available to them at any given point of time. So what they need to do is that the money should be made available at the required moment. So the government of India will go back and entrust its responsibility back in terms of the RBI, that is the Reserve Bank of India. Unless and until the Reserve Bank of India approves all the projects, all the loans put forward, the government will not be able to get a financial aid here. So the role of RBI is a banker to the government for all the government needs, for all the reforms, all the tenders, all the important functions in terms of starting a project, in terms of giving a capital expansion, in terms of giving a push to the economy. It is the RBI which is going to stand with the government in terms of providing financial assistance. So for the government, RBI is not just a person who's going to print notes and end up there. But for the government, RBI is always the friend on which it can bank upon, it can trust upon. So in case of emergency, the government has to just look into the RBI, tell out its requirement, and RBI will come forward with all sort of financial assistance. So this is where the role of RBI gets even more important in the economy in terms of predicting the future of the country. Moving forward, we also need to understand the banker's bank role altogether. Now, when I say that RBI is a banker's banker altogether, that means to say that there is some important function here. What does the RBI do in terms of a banker's bank? Already there are n number of commercial banks that are available in our country. Now, all these n number of commercial banks that we are talking about or that we are telling about are all controlled by the RBI. So when I say it's a banker's bank, the RBI performs the same function of other commercial banks as other banks ordinarily do for themselves, but RBI lends money to all the banks in the country, all the commercial banks in the country. So which means to say that RBI's role is something where it stands as a backup for any other bank altogether. Now, for example, HDFC Bank wants to get money for some particular purpose, or a Lakshmi Vilas Bank has to get it, or there has to be a merger, or there has to be a financial push that has to be given to SBI or to any other bank in India. RBI will do the job of being a banker's bank. So for RBI, all these commercial banks, both private as well as the public sector bank, are like customers. So RBI will now act as a lender, will lend money to these banks at a particular rate of interest. So for any commercial bank, in case if there is going to be a default, there is going to be a situation where there is a lack of fund, I'm not able to function properly, I need more money for capital expansion, I need more money in order to resume my operations, I would go back to the RBI and raise a request. So RBI will also monitor each and every function of these banks, starting from the administrative reforms, starting from their credit policy, their interest rate, at what level the business has to happen. So every state of affair of a banking scenario and situation will be handled by the RBI. So RBI also will do the role of a banker's bank. This is the most important factor that we need to understand here. Followed by, it's the controller of credit. Now, when you go back to the economy and ask this question, where is the money coming from? The answer is quite simple. You will say that money is coming from the RBI's desk. So RBI decides today that yes, we will print money. So automatically they would have printed the money and money would start coming into the economy. But is it possible that every time RBI will just go ahead and print the money and let it loose in the market? Definitely not. RBI will attach strings to each and every factor of the money that is going to come into the economy, which means to say that by different methods, RBI is also going to control the extra flow of money in the economy, because sometimes RBI will also feel on this factor. If there is too much of liquidity that is available in the market, that means it is going to be a problem, because the value of money will start coming down. So what is going to happen here is that RBI will try to understand on this factor that when money is required, only to that extent, only to that level, it is going to fund, it is going to finance it. Sometimes when RBI decides that we will pull the money back, we don't want any kind of flow to happen, we don't want any kind of restriction factors coming in, then automatically RBI will make the purse tighter. RBI will decide that only so much of money needs to flow and we will not allow the money to flow further. So that is where RBI will become a tighter option altogether. This is very, very important. Why? Because the regulation of credit flow in the country is always counted upon and it is always a matter of national importance. You need to understand here, RBI uses both the qualitative and quantitative techniques to control the credit. Now, when I say quantitative techniques, they are concerned with the number, especially from interest rate or the monetary policy or any other credit policy. And again, when you look into the qualitative measures, these are more from the administrative reforms that the RBI looks in, so that they will be able to have a check on the banking practices altogether. Because there are many banks in the situation in the country where I would like to talk upon, who would like to give away the loans for a cheaper rate, or would like to just give away the loans because they feel that the customers are in need and they just try to deviate the rules altogether. So you need a qualitative banking that is able to explain on what factors, on what basis a loan is being generated and the loan is being given to a customer. So all the rules, regulations, practices, benchmarks, methodologies are being set by RBI, so that there is always a check on the credit. So when RBI decides at a point that they have to put their foot down by restricting the flow of money, they will do it, so that that brings the economy back into balance. Recently, you would have also seen that when RBI had gone ahead in terms of purchasing the bonds and purchasing a lot of amount in terms of the dollars. This was required. Why? Because RBI needed to keep a reserve. RBI needed money to inflow back into the system. So they took this step in order to revive the credit back into the system. So that is why I always say that RBI's role as a controller of credit is of high importance. Moving forward. Now, when I'm going to talk about the functions, I'm also going to talk about a very, very important factor here called as the custodian of foreign reserves altogether. Now, the purpose of keeping foreign exchange rates stable, RBI as a Reserve Bank of India, what I'm going to say is buying and selling all the foreign exchange currency, and they also protect the country's foreign exchange fund. So what does RBI do is that it sells the foreign exchange currency in the foreign market, that's the exchange market. and it increases the supply. When suppose, when you want to decrease the supply, yes, it can do it, and when it wants to increase the supply, it will do it on the other way. So when it starts is that RBI will sell the foreign currency in the exchange market when its supply decreases, and when the supply increases, RBI will try to take it back into its fold. In a most important manner, in a simple manner, if I have to tell about, RBI holds all the foreign currency under its control. So the role of RBI here is very, very important, whether it's going to be yen or euros or dollars, or it is going to be the yuan or whichever currency that we are talking about. RBI is going to have a hold on these currencies. So RBI will try to monitor the performance of Indian rupee versus the dollar, versus the euro, versus the pound or any other foreign exchange. The main intention of RBI is to see that a stability in terms of the rupee performing versus the foreign exchange. Now, there are many times that due to any kind of global disturbance, or due to a shrink in the economy, shrink in the business factor, or sudden impacts coming onto the business scenario, there might be a severe impact on the currency values. So at that time, what RBI does is that RBI will sell the foreign currency in order when the supply decreases, and RBI will buy back currencies when it requires an increase of the flow. So in both ways, RBI's role is like a monitor trying to understand the flow and the value of currency, especially about the foreign exchange that we are talking about. Currently, India is quite close to almost $500 billion in terms of reserve. And yes, we have been able to do it with a lot of inflow coming in from different countries, and the FPIs and FDIs coming in terms of the business development. So RBI definitely keeps a track of all the inflows and tries to develop the economy altogether. Moving forward, the other functions of RBI will also include in the developmental works altogether. These works include the function of clearinghouse, arranging the credit for agriculture, transferred. Now this has been transferred to NABARD, collecting and publishing the economic data, buying and selling the government securities, trade bills, all those factors, giving loans to the government and selling of valuable commodities. So what is RBI exactly trying to do here is that RBI is trying to understand the importance, the value all here, and it is trying to build in a function. It is trying to build in a system altogether where it can help the other sectors of the economy. Now, RBI is one of the primary function which I would like to mention is it is the watchdog of the economy. So if you happen to visit the RBI's website, you will get a regular update on the factors of the economy. That means you will be able to see, you will be able to understand what is happening in the Indian economic front, what are the changes, what are the factors that are governing, what is happening in terms of growth, in terms of business, where the things are changing, what are the new factors that are being reported. So all those things are being reported by the RBI at any given point of time. Now, RBI is a storehouse of information, and RBI will also try to help certain functions like the agricultural setup, or it might help in certain R&D. Now, RBI has recently started the Innovation Hub altogether, with Chris Gopalakrishnan becoming the first chairman of this RBI Innovation Hub. Now, like this, RBI will take up a lot of projects other than the banking, other than the economic function, so that they are able to guide the country through tougher times altogether. And that is a very, very important role, which I would say. Why? Because if RBI is able to understand the factors clearly, it will be able to guide, and it will be able to take the country, it will be able to indicate what is happening, when it is happening, and how we need to take it forward. Now, moving forward, I would also like to talk about the new role of RBI, which has been coming up in terms of the business. Now, the new department constituted in RBI on July 6, 2005. this is a very, very important thing, named the Financial Market Department in Reserve Bank of India, was constituted for the surveillance of the financial markets. Now, after 2005, let me tell you, in India, we have been going forward in terms of a lot of development, especially about the financial apps and the various kinds of technology that are governing in terms of payments. So for RBI, now what has been the biggest challenge is that one side, the country is improving itself by bringing in innovative technologies in the app development process, no doubt about it. But the other side is all the apps, is all the factors being properly calculated and taken into picture? Are they all authorized? Are they all legitimate? Are they trying to cheat the customer? Are they trying to run away with the customer's payment? Because many a times you will see that by creating an app, by creating something new, what will happen is that they will try to cheat the customer, they will try to take the money of the customer, and the trust on the banking system will get completely collapsed. So what is RBI now trying to do is that trying to create a surveillance altogether on the various kinds of financial technological applications that are coming in. So they are also trying to look into the activities of debt management, monetary operations in future. This department will also perform the duties that are of developing and monitoring the payments in the money market, the various kinds of apps that are coming in, and especially in the foreign money markets. Now, you might see that when you go through Google, you will see a lot of Forex apps that have come, like iForex or IQ Option. These are the places, and especially when you start talking suddenly about the Bitcoin and other emerging currencies with technology like blockchain also coming into picture. Now, what is happening here is that for the RBI, monitoring it and managing it is going to be a very big question altogether, because RBI is not going to accept each and every technology on the face value. RBI will definitely question people, will definitely ask in terms of what is being happening on that particular scenario. So the department of RBI, especially the new department, will try to sink in, will try to understand what are the changes that have been brought, why these changes have been brought, and what is the impact of these changes in terms of the role in economic development. So that's why I say, so it can be concluded that as soon as our country is growing up, the role of RBI is also going to be very, very crucial in the upcoming years. Why? Because we definitely need a monitor, we need a leader who's going to continuously survey, understand, and go forward in terms of understanding the process, in terms of giving us guidelines, straightening the financial system, and giving a simpler approach to the banks so that they are able to serve the customers at any given point of time. Moving forward, I would also say the role of a regulator and supervisor in payment and settlement system. With the authorization of Google Pay, Phone Pay, Paytm, or any kind of UPI payment systems that have been coming into a picture, the role of RBI has become even more stronger. Why? Because they are trying to improve the overall economic efficiency. The Payment and Settlement System Act of 2007 that was brought in by the RBI has been trying to include all the regulation, supervision of payment systems in our country, which is a very, very important factor that I would like to talk upon. In this role, the RBI will focus on development and function of efficient payment system and their mechanisms altogether, the settlement mechanism. Nowadays, when you look into your Google Pay, Phone Pay and all, there's a lot of cashback, lot of offers coming in, lot of features that have been added in order to attract the customers. But all these offers, all these functions, are they true? Are they correct? Can they be used in that way? RBI is the only person who can authorize on this. So the way the money is getting settled, the way the money is being transacted, how it is being regulated, what are the policies, what are the schemes, what are the methodologies altogether, that's where we are going to come in terms of the RBI. Especially starting with the NEFT and the RTGS and functions like IMPS coming into picture, the role of RBI is no more just like a monitor but also a technological leader who's going to understand the various settlement system, the various process that are coming on our way, so that we will be able to do banking even more secured and simple altogether. Moving forward, managing the foreign exchange, as I've already mentioned, is a very huge process now RBI is facing. With the increasing amount of attraction of India becoming a complete FDI destination. Now, moving from the Foreign Management Exchange Management Act that was in the year 1999, the objective was to facilitate our external trade and promote an orderly development maintenance of the foreign exchange in India. Now, this is a very important function which I'm talking about. Why? Because with the increasing integration of Indian economy with the global economy coming into picture and rising from the capital flows, the foreign exchange market has evolved as a key factor, as a key segment of the Indian financial market. RBI has an important way in terms of regulating and managing this segment. RBI will also try to manage the forex and the gold reserve. So this is definitely going to be a very important market for each one of us, and this will try to understand the value and importance of currency. With a lot of foreign players and a lot of money inflow coming into picture, it definitely leads a very important and a secure way of managing our foreign exchange and taking it forward. In the coming years, India would also become the #1 destination in terms of controlling the foreign exchange factor, and this would definitely become a very big hub in terms of going forward in terms of the global business. Moving forward, the foreign exchange on any given point of time is being controlled by the RBI's Financial Market Department, which tries to control on the exchange by undertaking the sales and purchase. So they look into how much of currency has to be bought, how much is being sold in the market, who are the authorized person, where it is being sold, and at what rate it is being sold, what is the volatility in the market. All those factors have been decided and looked after by the RBI. So the role of RBI is more from a secured process rather than an unsecured process. So they try to understand the volatility and try to bring back stability into the market. With this, I come to the conclusion of today's session, and I hope and believe that all the information shared here is of a great help and use for you. In the upcoming session, we will be talking about the monetary policy of India, which is very important topic, and that is also governed by the RBI, which is helpful in terms of building up a stronger nation. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me on this wonderful session.